Today, we are diving deep into one of the biggest moves to tame the crypto world, the European Union's Markets in Crypto Assets regulation. You've probably heard of it as MiCA. This is the EU's master plan to bring some serious order to the chaos of digital assets. We're going to break down exactly what it is, who needs to be paying very close attention, and why it's a huge deal, not just for Europe, but maybe for the whole world.
I mean, of course you have, right? The last few years in crypto have been, well, a completely wild ride. We've all seen the insane highs, but we've also watched massive exchanges just collapse. We've seen billions get drained by unbelievably clever scams, and we've all felt that heart-stopping volatility that can turn a fortune into, well, nothing overnight. It's exactly that chaos, that feeling that there's no safety net, that really showed the cracks in our old financial rules and basically forced regulators to sit down and draw a brand new map. So here's how we're going to make sense of it all. First, we'll take a quick look back at that Wild West era that made something like MiCA absolutely necessary. Then, we'll introduce the rulebook itself, what MiCA actually is. From there, we'll get into the nitty-gritty, the new rules, the new rights you have, and especially what it means for stablecoins. After that, we'll look at the real-world impact, the good, the bad, the whole shebang. And finally, we'll look at what's coming down the road. By the way, if you're getting value out of this breakdown, do me a favor and hit that like button, subscribe for more deep dives into digital finance, and share this with anyone trying to wrap their head around the new rules of the game. All right, let's do this. Okay, so to really get what MiCA is all about, we have to go back to the beginning. We need to understand the problem it was built to solve, that untamed, unpredictable, and let's be honest, often dangerous world of the early crypto market. Just try to imagine running a crypto business across Europe before MiCA came along. It was a total nightmare. It was like trying to navigate a maze with 27 different rulebooks, and none of them matched. Something that was perfectly fine in one country could land you in hot water in the one next door. For innovators, it was a mess of legal uncertainty. But way more importantly, it left regular people, consumers like you and me, completely exposed. There were just no consistent rules for how companies should disclose risks, protect our funds, or act ethically. And that meant people were vulnerable to everything from straight-up fraud to having their life savings vanish when a platform just imploded. The whole system was broken. So, out of that regulatory black hole, the European Union forged its answer. This is Europe's big attempt to lay down the tracks for a whole new kind of financial system, one that's actually built for tokens and blockchain. You can think of MiCA as the foundation for a safe and tokenized European market. At its core, MiCA is really simple in concept. It's one rulebook for 27 countries. The whole mission is to just sweep away that confusing mess of national laws and replace it with one single, clear framework that everybody can understand and, actually rely on. The EU is trying to build a foundation on three things that have been seriously missing in crypto for a long time: clarity, stability, and trust. Those are the pillars you need to bring the stuff from the wild fringes into the mainstream. And those goals are held up by four main pillars, each one designed to fix a major weakness in the old, unregulated system. First and foremost, protecting you, the consumer and investor. Second, preserving financial stability. What does that mean? It means making sure a giant stablecoin can't just collapse and risk taking the whole economy with it. Third, and this is important, fostering innovation. Not by having no rules, but by giving good companies clear, predictable rules so they can build with confidence. And finally, ensuring market integrity, which is a fancy way of saying fighting the kind of insider trading and market manipulation that has just run wild in crypto. So who actually has to play by these new rules? Well, it really boils down to two main groups. First, you've got the issuers. If you're creating a new crypto asset and you want to offer it to people in the EU, MiCA is for you. Second, and this is the big one, are the crypto asset service providers, or CASPs. Now, this is a super broad category. It covers everything from the big exchanges where you trade to the custodians that hold your assets and even the companies that give you a digital wallet. And here's the kicker. If a company from outside the EU wants to serve European customers, they have to set up an actual entity inside the EU and get fully licensed. The whole game of serving EU clients from some offshore haven? Yeah, that's over. All right, so we know who's on the hook. Now let's get into the nitty-gritty of what MiCA actually demands. This is where the law goes from just being a big idea to a real set of rules that's going to change how crypto businesses run day to day. Okay, one of the absolute biggest changes here is what they're doing with the white paper. For years, a crypto white paper was, let's be honest, often just a slick piece of marketing.
Under MiCA, it becomes a legally binding document. The best way to think about it is like a prospectus for a company going public. It's a document that has to lay out all the facts, all the figures, and all the risks in plain sight. It has to detail the tech, the rights you get with the token, and who the issuers actually are. And here's the real game changer. If that white paper is misleading and you lose money because of what it said, the issuer is now liable. You can actually take them to court. Now, MiCA gets really serious when it comes to stablecoins because it knows they have the potential to shake up the whole financial system. It basically splits them into two different buckets. On the left, we've got e-money tokens, or EMTs. These are pretty straightforward. They're pegged one-to-one to a single official currency. So a euro-backed EMT is supposed to be like a digital euro, always worth exactly €1. On the right, you have asset reference tokens, or ARTs. Now, these are more complex. They're backed by a whole basket of different assets. That could be multiple currencies, like the dollar and the yen, a commodity like gold, or even other crypto assets. And because their value is tied to a mix of things, they get their own, much stricter set of rules. So, after all that, what does this actually mean for you, the average person using crypto? Well, it means a whole new world of protection. Just look at this list. We already talked about being able to sue over a bad white paper, but the second point here is huge: segregation of client funds. This means an exchange can't just mix your money in with its own company cash anymore. This one rule is a direct shot at the kind of behavior that led to some of the biggest collapses we've ever seen, where firms were basically gambling with their customers' money. Under MiCA, your assets have to be kept separate and safe. That is a monumental shift. Okay, so the rules sound good on paper, right? But what's the real-world impact going to be? No regulation is ever perfect, so let's weigh the consequences of MiCA, both the benefits and the burdens. The benefits here are pretty powerful. For businesses, the absolute grand prize is something called passporting. This is a total game changer. It means a crypto company can get a license in one EU country, say France, and then use that license to operate freely across the entire EU, a single market of over 450 million people. That just slashes the red tape and cost. For the market as a whole, this single rulebook brings legal certainty, which is like oxygen for investment. It builds trust, and it creates a safer playground that could finally convince the big, cautious institutional money to jump into crypto in a serious way. But look, it's not a silver bullet. Complying with all these MiCA rules is going to be expensive and complex, and that could really squeeze smaller startups, making it harder for them to compete with the giants. And even more importantly, MiCA kind of sidesteps two of the hottest areas in crypto right now: decentralized finance, or DeFi, services that run on code without a central company, and most NFTs, those unique digital collectibles. That means, for now at least, those corners of the crypto universe are still the Wild West, and some people worry that the really tough rules on stablecoins might actually stifle innovation and new competition. So, with the rules in place and the impacts weighed, what's next? What does the road ahead actually look like for crypto in Europe? Both for the companies that are now scrambling to comply and for the regulators who know their job is far from over. For any crypto business that wants to operate in Europe, the countdown has officially begun. They need to be taking 4 key steps, like yesterday. First, a deep dive gap analysis to see how their current setup compares to MiCA's requirements. Second, they have to figure out exactly what kind of license they need to apply for. Third, and this is crucial, they need to start talking to their national regulator now, not a week before the deadline. And fourth, they have to get to work upgrading their internal systems for security, anti-money laundering, and of course, that all-important segregation of client funds. And make no mistake, there is zero wiggle room on the timeline. While some existing companies got a bit of a grace period to get their house in order, the sand in the hourglass is running out fast. By July 2026, every single crypto firm operating in the European Union must be fully compliant with the new rules. No exceptions, no excuses. The transition is over and the new era begins. The clock is ticking. Look, the folks who wrote MiCA are smart. They know this is just version 1.0. We should absolutely expect to see future updates. Regulators are already studying those gaps we talked about, so a MiCA 2.0 that finally tackles DeFi and NFTs seems pretty much inevitable. And then you've got the really fascinating question of how these rules are going to work with a potential digital euro. This is a living, breathing regulation, and it's designed to evolve. So what do you think? Is MiCA the blueprint for the future of global crypto rules, or is it already behind the curve? Let me know what you think down in the comments. I'm really curious to hear your take. And all of this leaves us with the ultimate question. The EU has laid out its vision, building some of the first comprehensive crypto rules on the planet with the hope of setting a global standard. But this is the tightrope they have to walk. Can you bring order and safety to all this chaos without accidentally killing the very innovation that makes this space so exciting? The future of digital finance in Europe, and maybe, just maybe, the rest of the world really hangs in the balance. Thanks so much for joining us for this explainer.